everyone, it's Alyssa Corum and Justin Nielsen here with a look at the stock market today. It is Tuesday the 26th, and on today's show we're going to be taking a look at the market, giving you some perspective, how the leaders are doing, very key in seeing what the market direction is.
Always. Mm-hmm.
And we're also taking a look at two recent IPOs with compelling chart action. But first, let's check in on the major indexes, finishing the day well off the highs, but off the lows. The NASDAQ finishing the day up 0.7%. The S&P 500 as well, while the Dow finished up about 0.6%. So what do you make of today's action? We're not quite out of the woods yet as far as the uptrend being under pressure.
Right, yeah, so we went to uptrend under pressure. Friday was ugly. And now Thursday was great, Friday was ugly. The last 2 days, what's been interesting is the leaders have held up much better than the indexes themselves. And so I'm not sure exactly where the IBD 50 index or breakout index ended up. We tend to look at those as measures of how growth stocks are performing. That's FFTY and BOUT. But generally, the leaders were holding up very well throughout the day and yesterday, and so that's what we look to. Now, yes, we have come off a little bit from our highs, but we were also very extended, especially on that Thursday. We got really extended from, most measures. And, even if you look at from Christmas Eve, when we've been starting this rally, we haven't really had that many breaks. And so we definitely deserve a break. So going forward, what you have to look at is, what do the leaders do? How does the market act? Now, we did go under pressure because we wanted to just use an abundance of caution.
Right, with Friday's action.
With Friday's action, but so far the leaders are holding up. So this is very different than what we saw in October and February of last year, where it was that vertical violation coming down very hard, leaders getting hit just over and over and over. We're not seeing that right now.
Well, speaking of leaders, let's take a look at the IBD 50 breakout index ETF. BOUT finishing the day up 0.6%. FFTY finishing the day up about 1%. But if you look here, this just shows you how leading stocks are holding up amid the recent pretty big downdraft that we saw.
And one of the things that's interesting about the IBD breakout stock index is when things were coming up so strong, when the markets were coming up so strong off the bottom, there were a lot of stocks on this index, and now that has started to whittle down. So that's actually a benefit of this pullback, is now we're going to see who the leaders are. And the number of stocks has gone from 136, I think, at its high, to now 63 at today's rebalance. So it's definitely shifted into a more concentrated portfolio, and that's usually better for this particular index.
All right. Well, let's also take a look at some names in the IPO space. One current stock of the day and one recent stock of the day. Farfetch was recently a stock of the day. Ticker there is FTCH. A big move today, up about 6.5% in heavy volume. So this one was already on our radar as it formed a handle on its base, and a really nice move today.
Yes, and so this, you can almost look at it as a reversal, and we do like to see reversals in the handle, so this is the start of maybe something. In terms of a short-term play, we did put this on Swing Trader. A little unusual because we're usually trying to look for those very profitable companies. This is not profitable yet. It does have very strong sales growth, and with an IPO, sometimes that sales growth can be enough, if it's phenomenal, to really get something going in an IPO base. And so that's what we were kind of looking at here as a short-term play. But this is definitely one to have on your radar. They're in the luxury fashion. They have an online platform, and if that sales growth can continue, this might be something that can quickly turn profits and be something that really can move.
Exactly, and so we do have the swing trade play here, and this handle forming, and depending on how long it takes the stock to come up the right side, it could become even a new base instead of just a handle there. But 3170 nonetheless, it would be the traditional entry point here.
And sometimes what we do is we'll do early entries by taking like a little downtrend on the handle, and once it crosses that downtrend, that can provide you an early entry. So that's a little technical trick that you can do.
Very nice. Okay, so let's also take a look at today's stock of the day, Futu Holdings, another IPO stock. Now, this one has strong sales growth, but it also turned a profit. So this one is profitable, a name out of China in the finance space.
Right. So now we're talking about getting to the Chinese, the emerging affluent Chinese consumer. Okay, you're going to want to get into wealth management, and this is what they're offering. This holding company is offering that access to brokerage services to the Chinese affluent consumer.
Right, and it's a little hard to see on the chart there. It's looks a little squished, but we do have Futu starting to form an IPO base here. It's in the early stages, but it would be starting at that left side high here of 1928, adding 10 cents to that. So when we're looking at IPO stocks, we don't want to be buying on the first day, but these IPO bases can provide a really good opportunity for investors.
Yes, and sometimes those IPO bases, whereas a traditional base has to be, 7 weeks long or 5 weeks in the case of a flat base, for IPO bases, we can get a lot shorter base. Sometimes I remember Michael Kors back in 2011, I think, was an 11-day base, and we were playing it off of that. Google was a very short base, when it came out of its IPO base. So just know that sometimes the rules with IPOs are a little different.
That's right.
That's because they are so powerful.
Yes, exactly. And can you talk, I don't mean to put you on the spot, but a little bit about the research that we've done as far as the success rate historically for some of these IPO bases?
It's phenomenal. I mean, the IPO bases, if you look at the best performing stocks going back, so many of them had their IPO in the previous 8 years, so they were these newer issues, before they made their huge runs, they had that IPO. And again, if you just look at that first base, Mike Webster did some research on this, and he just looked at, okay, you take a look at the IPO base, where is it 8 weeks afterwards, after coming out of that IPO base, and the success rate was phenomenal. And not only that, but the gains, so here again, if you can get in the huge gains, just a few of those can make up for a lot of losers if you're cutting your losses quickly.
Exactly.
So it's, all stocks are not created equal. If you think that, everything is kind of balanced, it's not. Most of your winners are going to be the bulk of your gains, the few select ones, the ones that are the big gainers. That's where most of your profits are going to come from. And everything else is just kind of maintaining rules to make sure you don't get hurt and you keep your capital, I should say.
Right, yes. Scott St. Clair even kind of likening it to feast or famine type of situation with IPO. So you definitely, on the downside, want to be sure you are following the rules, but again, it can be a big opportunity on the upside.
And you have to make sure you balance it out. Don't have a portfolio full of IPOs, because they are more volatile, they are more risky. This is where balancing your portfolio out can really help too. Yeah,
the far-fetch base is pretty deep, so volatility definitely there, something to keep in mind.
And as you saw with Futu as well. Now, granted, that's an arithmetic scale. Sometimes that can make things look a little bit more pronounced, but it definitely looks a little bit more volatile there.
All right, well, some great tips for IPOs. We hope you enjoyed it, and we hope you check out investors.com for all the latest stock news and analysis. And make sure you're following us across social media, whether it's on Facebook, Instagram, YouTube, or Twitter. And one final announcement with all this analysis that we're doing, looking at MarketSmith charts. Everyone has the opportunity to look at them themselves for free this week with MarketSmith Free Access.
And the stock ideas is a great place to start. That new button is phenomenal. Really get a lot of great ideas from that.
That's right. So make sure to go check it out at investors.com. MarketSmith Free Access Week. All this week. You can reach out to us on social media if you have any questions about any of the features. We'd be happy to point you in the right direction on that. Thanks for watching, everyone. See you tomorrow.